Okay, so now we are rolling, and I will sit and stare.
Start out with reality TV stars. So, okay, you're sharing.
I am.
So, good, perfect. Reality stars Todd and Julie Chrisley of TV show Chrisley Knows Best were indicted on 11 criminal counts of tax evasion and bank fraud. The U.S. Attorney's Office press release says the pair have been indicted on multiple counts of conspiracy, bank fraud, wire fraud, and tax evasion. Tax attorney Rob Wood of Wood LLP in San Francisco writes about this in a recent Forbes article. So, Rob, since you're joining us today, let's start off by going over what happened in this case and how these celebrities were found guilty of these charges.
Well, first of all, as I'm sure they would be quick to tell you, they haven't been found guilty of anything yet. An indictment, the IRS, when it releases these things, or the Justice Department, makes a big splash of it, and that's certainly the case with someone who's famous or in the public eye. But an indictment, as they usually note at the very end of their release, is just sort of an accusation, and nothing has been proven yet. I know the Chrisleys have, I think, quickly made statements that everything is sort of trumped up, and that there's no wrongdoing whatsoever. So it's going to take a long time for it to unfold. But I mean, all we really know is sort of what they were accused of doing.
Okay, so then what exactly have they been accused of? We've already mentioned the charges, but more specifically, what happened here?
Yeah.
Sorry, my dog is making noises. But anyway, so let me just start over again. I'm sorry if you can hear him. But so more specifically, what happened here? I know we have these charges, but how did we arrive at this point?
Yeah, so I think what I mean, it's fairly detailed, and I think the sort of high points are that they have been accused of hiding income. I guess, although it might be irrelevant, they apparently spend lavishly and have a lavish lifestyle. That's, generally speaking, when someone owes the IRS, that can be a real sort of hot button. As you can imagine, the IRS wants to be paid. I think for me at least, the couple of things that seem most noticeable, and these are common to other criminal tax cases, is the accusation that they didn't keep personal and business separate, that there are sort of overlap, and there are things claimed as business that really aren't. That's a fairly common problem, but it's also one that the IRS looks for. So I think that is kind of one that needs to be sort of fleshed out on both sides. The IRS needs to try to prove what happened, and the Chrisleys need to then defend themselves. I think another one, which I guess many people are surprised about, as you noted, Vanessa, these are both tax charges and other things, bank fraud, for example. And the tax system and sort of other types of filings are often compared. So you might think that your tax returns, if you are being honest and complete, that your tax returns are safe. But you might, on something else, in this case the Chrisleys, I think, were accused of doing various real estate financing deals and giving different information to banks. So that is a real, I think, potential worry for many people. I mean, it's surprisingly, again, you might think, well, gosh, I'm just trying to get a loan and I'm trying to buy this piece of property, and that has nothing to do with taxes. But I think you want to be consistent, and obviously if you're signing something under penalties of perjury, whatever it is, you don't want to misstate anything. So that's another one. And I think finally, one thing that I was struck by, the Chrisleys' accountant has also been accused of wrongdoing. I think he was indicted as well. So there's a real question about sort of who's going to say what. But they have been accused of obstructing the IRS, that is, of lying to the IRS, of hiding income and those kinds of things. And once again, I mean, some of this, I suppose, comes down to how you conduct an audit, but the majority of criminal tax cases still come out of civil audits. So, and sometimes the taxpayer is sort of pushing back on the IRS and thinking that they can outsmart the IRS, and trying to hide things, trying to open new bank accounts so the IRS doesn't find the moving money around, so the IRS doesn't grab it, that kind of thing. And I think you have to be very, very careful, because obstructing the IRS, conduct that is evasive in an audit, can lead to criminal charges. And I don't know exactly what happened here or what was alleged to have happened, but that's certainly one of the items that the IRS and the Justice Department seem to be saying here. And I'd say those are if proven to be true, those are pretty serious charges.
Okay, and then you kind of touched on this, and this was going to be my next question. Are there lessons learned just for anybody, any taxpayer, that they can learn from this case itself?
Yeah, I think yeah, and you're right. I sort of gave away this headline, I guess. I mean, to me, those are keeping business and personal separate. That can be challenging, but that is I'd say a constant problem for people who own their own business or kind of run their own business. But that is one. Do your best, separate accounts, separate entities, those kinds of things. Try to avoid commingling of personal and business. In an audit, I didn't say this directly, but I suppose I implied it, hire somebody to handle it for you. Don't try to do it yourself, and don't try to outsmart the IRS. And this is, to a lesser extent, true with state tax authorities as well. It's really, it's not, you certainly don't want to be hiding the ball. I know that it can be tempting, but if they ask you a question, how many bank accounts do you have, and you say 5 and you list them, don't omit one, and don't try to give them the list and then quickly run out and open new bank accounts or new, open new companies and things like that. It's surprising, if you look at criminal tax cases, you'll see that very frequently that sort of thing happened. The taxpayer, was trying to kind of outrun the IRS, and if you get caught, it's again extremely serious. The criminal charges can be, for that sort of thing, can be much worse. I think, by the way, the Chrisleys, as somebody has noted, this may have been in the Justice Department release. If they were convicted of all these charges, which, I mean, frankly, that strikes me as pretty unlikely, but if they were, the prison sentences could be something like 30 years. So it's super serious, I would think. And let's see, I guess finally, just keep good records. Keep good records, and if you are owing the IRS, this might simply be a collection case where you filed your tax return, you say that you owe them hundreds of thousands of dollars. There's no dispute about that. You're not trying to say you don't, but you say, look, I can't pay you. I'm going to try to pay you over time, that kind of thing. I mean, this is very common, and there's an established way of doing that. But if you're doing that, don't be photographed, buying a Maserati or driving or having lavish parties or things like that. I mean, it's common sense, but some very high flyer people, I think, do this, and once again, that can really blow up in your face.
Okay, thank you so much, Rob.
Thank you.
Okay, that seems like enough staring to me.
Okay.